The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 17th magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. Of course, if you can't dial on in, you can go ahead and send me an email like Tom and Jack did already. That would be steve@tfnn.com. Just inside the subject matter, put radio show question. That'll be easy for me to ferret out. That, your question amongst the many emails that I get, probably not unlike you. And then, of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Magnificent and Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 17 points at 21,655. S&P is up $2 and change, trading at 2462. The NDX 100 up 8 points at 5846 is what she's trading at. Russell 2000 up 5 points. Nearly 0.4% to the upside. That's trading at 1434. Let's go check in on Mr. and Mrs. Russell out here. Let's go take a look at the IWM. Let's do this here just to kind of clear things up, right? It may clear up what? Let's just go take a look at the message here. But let's look at the longer term message. I think on the monthly chart, what we have here is a confirmed A to B equals CD to the upside. Now, those of you just tuning in, you may, and if you're new to TigerTV, or TFNN, you might say, what in the Sam heck is an A to B equals CD pattern? Well, it is a tool that allows you and I to be able to get a price projection of where price is headed to. What we like to look at is this is the price projection of the Russell 2000 going back to 2009. And what we like to do is try to identify where there's a significant change in trend. And inside the IWM, that was in June of 2015. Price went from $34.26 to $129. Now that price difference, you can subtract it and then just simply multiply or just simply add that to the bottom of where we see the next price change. That's what we refer to as our C point, A, B, C, D. And that gives us our D point projection, or at least gives us at least one of those projections. So the IW makes a retracement into February 2016. About a 0.382. The exact number is 37.39%. And as the B point, that is the June 2015 swing point, which had 669 million shares, as it was being passed, it was being passed with wide price spread and accelerated volume. There is no other way to call it because that's in fact what it was doing. 901 million shares. That gives us a minimum price projection 1-to-1 of 188.48. So if you are wondering where is the Russell 2000 headed to, you know your first price target is 188.48. In fact, off of the bottom here in 2016, At this stage, price is moving at a more elevated pace than it did between the March 2009 and that 2016, 2015, I should say, high out here. That would then suggest that it's really about 214.28 as far as where the IWM. Now, this is the monthly chart, so there's going to be bumps along the way, but you already have a confirmed A to B equals CD to the upside. That, folks, is a beautiful thing. Now, the question, the question that came in earlier from Jack was, hey, what do you see in the charts for Netflix? Netflix coming out with earnings after the bell tonight. And so let's do this as I scratch my head, because this call here is not so simple. We'll start with the daily chart. We'll look at a couple of different charts and patterns out here. So as we take a look at the daily chart, I'm just going to go ahead and put my TAS market profiles up here. You'll see some green and blue horizontal lines out here. And we can see that Netflix made a high back around June, the early part of June 2017. And as it was coming off of those highs, about 10.2 million shares. Now, what you and I know is that selling was exacerbated by some hedge funds that needed to liquidate in order to be able to get back some money for redemptions out here. Nonetheless, there are some sellers that are camped out here. There was 10.29 million shares that were traded hands. On the move up, we haven't been anywhere near. Well, yeah, I take that back. July 12th, 8.5 million shares. The week after, about 6.7. Volume has dissipated last week, but we're in summertime. What this chart says to us is that Netflix should have some resistance at 166.87. Now, this is this version of the daily chart. If we take a look at Stevie's other version of the daily chart, we put up the Ninja Trader application out here. What we are going to see is yeah, okay. We're going to see here, this is kind of interesting, is that the very bottom panel of my screen here, that's the price oscillator. And this is the difference between the 19 and 39-day exponential moving averages. You can see that on Friday, price was crossing that zero line. We're still kind of flirting with it, as you will today. Now, what does that mean? This is typically a spot where price would stall. And typically, need a little high pitch there, and typically where we'll see price and Stevie's red line catch up. Now, I don't know if that's because the red line is going to move higher, the oscillator and change line, or price is going to pull back. But typically, this is a stalling point. So this tool here suggests that the response in the market maybe is going to be a bit muted. Now, what you'd like to see, the ideal test, and I do mean ideal, would be for the red line and price to go ahead and hook up and for it to act as a trampoline. And then price would then be giving you the message that it's going to go ahead and take out its highs. It's going to head lower. That doesn't mean that it can't just go ahead and jump up and take out its highs as well. And you do have a rising price oscillator above zero. But typically at this point in time on a daily chart out here is where we see that stalling formation. Last time that we saw the price oscillator take on the zero line was back on June the 29th. Price moved slightly lower. It was when we saw the test of that red line, which took place on July 11th, that it gave the confirming signal that it was done moving south. We're now just looking for that same confirming signal as well in this case here. And again, that's on the daily chart for Netflix. If I switch over, take a look at the weekly and the monthly charts here. So the answer is on the daily. I'd have to say it's pretty neutral at this stage. And on the weekly chart here, price starting to move higher, doing less relative energy, right up against Stevie's red line. This one is neutral as well. How about the monthly chart? Can we sneak this in before we go to breakout here? What's the monthly chart say to us? Monthly chart is somewhat bullish. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets.
The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You know, we were taking a look at A to B equals CD patterns. During the first segment of the show, we looked at the Russell 2000 small caps. Now, what you and I know is that the Russell 2000, the NDX 100, when they're out there leading the charge, it's a beautiful setup for bullish market conditions. And if we take a look at Microsoft, just to get a feel for what it's doing, that's for Tarpon 2 inside the Tiger's Den. The question was, where is this headed to? Now, if you're looking at the chart on TigerTV along with me, you're going to see a monthly chart. Takes us all the way back into the highs in 1999, December 1999. Price point there was $59.97. And from that swing point high to the low down here in March of 2009, 1487. If we just do a Fibonacci expansion, that might just, for those of you that are new listening in, you might say, what the Sandbeck is that? This just simply allows us to come up with another measurement tool of when price is expanding beyond its swing points. We take a look at the most relevant swing points that we see on the chart here. That would be the previous all-time high, as well as the low from back in March of 2009. Now, as we speak right now, price is trading, this is a monthly chart we're looking at, it's trading above the 1.272 expansion. We pretty much look at two primary expansion levels. So as long as price this month here at Tarpon 2 stays above 72.24 and preferably above the high of last month, this would suggest to you and I that price is headed to 87.84 in that range. That's the 1.618 expansion area. But this also has a confirmed A to B equals CD to the upside. If we take a look at the B point, it's this little shooting star candle that formed here in November of 2014, the high of which is 50.05. 523 million shares were traded that month. When that B point was passed, it was in October 2015 with what? Same thing like the IWM. Wide price spread, accelerated volume, 857 million shares, confirming A to B equals CD to the upside. So that price projection here, let's come all the way back to the lows in March of 2009. Let's try to go ahead and put that. There we go. Let's come back out of that nice little shooting star in November 2014. Let's come down to the C point out here in August 2015. You're going to see here that we're close to the 1-to-1 level, 74.90. Just like the IWM, we suggested that the move, in this case here off of the Microsoft bottom, the C point in August 2015, much stronger than anywhere along this A to B leg out here. And that says you're going to do more than a 1-to-1, very much just like the IWM. So this says your 1.272 expansion gets you to 84.46. So 84.46 to 87.84 to even 96.63 is where ticker symbol MSFT is headed to. That one's for you, Tarpon 2. Now for Tom. Tom says, let me go ahead and pull this email up here. And Tom says, good afternoon. I'll say good afternoon to you. I'm long from Friday, the JNUG, the Nugget, the USLV, MUX, and Hecla. I am wondering, McEwen Mining, I am wondering what your thoughts are on the U.S. dollar, Japanese yen. So let's go take a look at it. Right now, we've got a little bit of a bounce in the Japanese yen out here. Now, this is a monthly chart, not exactly what you wanted to see on a daily basis, but I'm going to give you the different perspectives out here with regard to so what we do see on the longer term basis for the Japanese yen. We know that price has moved up, tested resistance, this little descending channel or trend line, I should say, out here. And so that is helpful. But I'm going to come back to take a look at let's do this. Let's come back and take a look at the yen this way and look at market profiles. Let's look at the 60-minute, the 240-minute, the daily, and the weekly. That's what's on the screen right now. So at this stage here, what the yen has done, Tom, is it's been able to close above its 60-minute profile. 112.58 is the number. There's a 15-minute delay on this chart here in taking a look at the currency cross pair. As long as price stays above that, 112.58, we could anticipate a bounce into the 113.04 level, 113.04. So that should put a bit of pressure on gold, or perhaps on silver, perhaps on some of these mining equities, but not enough to the extent that one would want to go ahead and try to bail out. Now, you are a shorter-term trader, but the question was, what are my thoughts on the U.S. dollar, Japanese yen? And at this stage here, this suggests that it wants to go ahead and perhaps move to higher price, 113.04, before it gets knocked back down. Now, the real deal out here, and I'm going to switch over to yen futures as opposed to the currency pair. This way we are using live data. And I'll give you the make it or break it number out here. Now, here's the beauty of Friday's price action in gold, in the yen. And that is that we were able to see a move through Stevie's red line. That's priced at 88.67 as we speak right now. As long as yen futures hold that price level, Tom, then the move out here is at least a counter trend move, because that price oscillator is still down below zero. And while it's down below zero and it has turned up, we don't know if it's just a counter trend move, if that was the bottom out here. We just simply don't know. But what we do know, as long as price is staying above my red line out here, then it says, okay, you have more potential upside. So that's what the yen is doing out here as we speak right now. We had wide price spread in the case of gold and silver, as well as the XAU. You say you are in the your long JNUG and Nugget. Let's just let's do this. Let's use the GDX. And then you just go ahead and gauge your trades for the most part off of that. In the case of the GDX, the red line number you're looking at is 2165. As long as the GDX is trading above that level, then these other trades should do just fine. But let's go ahead. You mentioned McEwen Mining, MUX. Let's go see what its number is that you would be paying attention to. I'm hoping at this stage here that we're getting some live pricing. I'm just going to make sure here. Let me just move over over to a different chart just to make sure MUX. Let's put this on a daily basis out here. 264. Where did I put that? Did I delete it? Oh, man. Oh, stupid were you? Don't answer that for me, by the way. Don't answer that for me, because I already know the question there. I can't believe I deleted it. I thought I just minimized it. That's okay. I've got another chart. I got Plan B out here. So you're at 265 as you speak right now, where it's trading at. 254 is the number to be watching in McEwen Mining. You said Hecla as well. HL is the ticker symbol. I'm just on another screen out here. And the number there to be watching is 506. So those are levels you want to see those equities stay above, as well as you want to be watching the yen. Now, why did Tom... Excellent question, by the way. Why did Tom ask about the yen? Smart guy. That's the reason. But I can show you the reason why. I happened to be listening in on Basil's show earlier, and he was talking about gold and priced in U.S. dollars, and, why isn't it acting the way that one would like to see it act? In other words, a weaker dollar, stronger metals. So let's go answer that question when we come back from this break, and answer the question, hey, why was Tom asking about the yen? I think you'll appreciate this next set of charts. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So the Dow right now is up about 12 points. S&P is up 2. And before we go into that last breakout there, we were talking with Dave via email about the yen. Now, this set of charts here, if you're watching us on Tiger TV, and I touched on this last week, this set of charts here, so I've got a tool inside the eSignal platform that allows me to take a look at direct correlations between two instruments out here. And this is broken down into 4 quadrants out here. So, you're welcome to ask me how one instrument correlates to the other. Now, if we take a look at the very 2 bottom panels of my screen out here, lower left, now I've got the continuous contract for gold in both of these cases. And below that, because right now I'm more interested in the correlation versus the current contract and so on and so forth. And the lower left-hand panel is the is gold versus the U.S. dollar index. You can see in this little box out here that I have. Let me go ahead and blow this up on my screen. And you can see in the box out here. Now, this data I've got going back, because daily chart we're looking at, by the way, taking us back into June of 2015. And so the correlation, you can see it is the U.S. dollar index. It is the continuous contract here as well. Now, how do you interpret this? It's very simple. When you see this is measuring the correlation. So the highest maximum level that this can get to is a +1. The lowest level is a -1. And I'm using a period of 4 trading weeks so that we've got more than just 1 day's worth of data out here. But it's a really great tool to help us understand the correlation that is in play with regard to 2 different instruments, or whether it is or whether it is not in play. So in this case here, when you see these red bars down below the 0 line, it tells you you've got an inverse relationship, which is what you would expect, right? That's in essence what you've been taught, that you would see an inverse relationship between the U.S. dollar. If it's getting weaker, then gold itself would be moving higher. And you can see how that typically works. When you see the lines above the 0 line out here, and you don't really see a 0 line, you can kind of see it visually with your own eyes out here, though. That says that the 2 instruments are moving in the same direction. So what we don't see here really is consistency, right? We don't see enough consistency for you and I to go ahead and conclude that, hey, if the U.S. dollar index is going down, that gold should go up, or vice versa. Whereas when you take a look at the yen, we take a look at the yen, there are just very brief periods. There's only been, since October of 2016, only 4 periods where we have not seen the, again, this is a correlation. And this is telling us that both of these instruments are moving in the same direction when they are above 0, which is basically predominantly the entire time frame that we're looking at. This takes us back to May of 2016. Don't worry about the direction, right? The direction of gold. What you know by looking at this chart here is the direction of gold and the direction of the yen are moving in the exact same direction here, both up and down, which is the exact reason why Tom was asking about the yen out here. This correlates. So with regard to a currency pair, and specifically the metal instrument, you don't want to be getting your head clouded up by taking a look at the U.S. dollar index. That would be my suggestion to you. Instead, go with the currency pair where the correlation is dead on balls accurate. And that's exactly why Tom was asking about the yen. And when this breaks apart and it doesn't work, then we'll just simply move on and we'll look for the next item out here. If we take a look at the top chart, here's the light sweet crude myth. Here's light sweet crude and its correlation to the U.S. dollar. Remember, above the line, things are correlating. Okay, they are both moving in the same direction. In other words, light sweet crude is moving higher, so is the S&P 500. Below it, you have the inverse relationship. You can see that for the most part, since about April of 2017, it's just totally become unglued. That's why you haven't heard too many people speaking about it, nor really should you. Now, let's take a look at this. We're going to go ahead and just simply change the instrument from the S&P 500 to one of the sectors, the energy sector inside of the S&P 500. Now let's see what this generates for us as a correlation. Looks very similar to the yen, does it not? So with regard to the energy sector, you can see how well correlated, both to the upside and to the downside, the XLE trades in relationship to that. And so one of the sectors, yes, the energy sector, direct correlation. Few times it comes unglued here during this time period, this 1 year period that we're looking for. But for the most part, this is a great correlation. There's a question at the end. Does the yen lead, lag, or is it coincident with gold? Duffy, it's the leader. It's the leader because it's so much larger. Its market is so much larger than that of gold. I'm convinced, based on market calls that I've been able to watch on an intraday basis and on a daily basis, that it is the yen that gives us the turning signal out here. It is not gold. But you've got to go ahead and do your own work and your own patterns out there to go ahead and prove that in essence to yourself out here. So here's the last one, but we can do any of them that you want. I'll go ahead and keep this set of charts here permanently, so you can send me emails or what have you. We can go ahead and take a look at two instruments and just understand whether there's any correlation there for you to pay attention to. Well, we'll do one more. You already know the answer to the next one that we'll do, right? But here's the Dow and General Electric. Now, the cool thing about these two instruments is in the past, even though General Electric is like number 29, 27, 28, 30 out of the top 30 stocks inside the Dow. So what that means is that from a weighting standpoint, it's got relatively insignificant weighting that's going to impact the direction of the Dow. But however, because GE was so involved with so many different industries out there, that it was a great tool to be able to see if, in fact, GE was kind of a leading indicator with regard to the Dow out here. But you can see for long periods of time how this directionally correlated out here. We've had some small periods where it hasn't. We're back into what looks like a directional correlation time period. That's between the diamonds, or the Dow in this case here, and General Electric. Now, we can just change this instrument here. Let me do this. Let's change this from the diamonds to the QQQ. And let's go ahead and change the instrument, the correlation, to Apple. And what do you think the correlation is there, even with the weighting structure? Did I do that? Did I do that right? Correlation? Did I do that? Do I do it? Yeah. Did I get the Q's out here? Let me make sure. There we go. I didn't think, it didn't look right to me. Now take a look at this chart. And of course, because of the heavy weighting inside of the QQQs, but let's face it, if you want to get the direction of the Qs right, you want to go over and see what, in fact, is going on with Apple. Now, you know and I know, and Dave Mason knows, that the Qs are headed much higher. We have a nice little confirming signal here inside of Apple. This is a different chart. This just takes a look at the money flow index out here, which last week got above zero. Apple wants higher prices. So what do you think the Qs want? Higher prices. Steve Rhodes with TFNN. We'll be right back.
Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Dow's up 14, S&P is up a couple of points out here. Now, last week you had the NDX 100 finish up 3.2% versus the prior week's closeout here. If you're watching this on TigerTV, this chart, the top portion of my chart out here, is for the weekly NDX 100. The bottom portion, what it does is it measures the change in the 1 week rate of change from percentage basis. I guess I could have done this a different way too, but I manually calculated this. Takes a look at the 1 week, but now that I told you that, I'm wondering why the heck do I have? Why should I keep doing the manual calculations? I have another way, another tool of doing that. In any event, we had a 3.2% rate of change to the upside inside of the NDX 100. Now Marty Zweig, he used to take a look at a 4% week over week change, but he was using the value line index when he was doing that to get a broader sense of the market. You could use the Wilshire 5000. You could use the NASDAQ Composite. You could use the New York Stock Exchange. In this case here, I'm just using the NDX 100 because actually it's when he developed his trading strategy, what he did and the research that he did, he was looking for a 4% week over week change to the upside or to the downside. And he used that in order to generate a bullish or a bearish signal. You would stay bullish until you got the bearish reversal. What I've learned in looking at the data, it's much easier to do this now, perhaps than in his day out there, was when you get those long or short signals that all you need to do is put your stop exactly below or above the beginning of that weekly signal. So in this case here, the NDX 100 would be saying as long as price stays above last week's low, you have a nice momentum move to the upside. Last time now I'm showing you the 3.2% level. The last time you could have used that same type of signal, that same type of large move would have been back here in December 9, 2016. You could have used the same technique and had your close below that week. There was another little short signal, or I say short, another long signal back January 6, 2015. 215. Otherwise, just simply going in between the top and bottom, those blue lines on my chart out here is just nothing more than, up and down moves out here. So a nice move inside of the NDX 100 last week that gives you another nice little initiation signal, very much like we just saw that's complementary with regard to the chart inside of Apple out there. Now, there's a question that was sent in from Dano in Clearwater, and the question is, Steve, the Tom DeMark TD sequential count on the SMH looks like a 13 count today on the daily. Does this look like it's going to give a pullback and a place to enter a long position? Short-term horizon up to the last high of 89.72. So let me switch over to a different set of charts out here. And let's go see what now, in the meantime, while that's being pulled up, let's take a look at this set of charts here. Let's take a look at our e-signal charts and look at our TAS daily and weekly profiles. And if we look at these, Dano, price is above both the daily and the weekly highs out here. So this gives us a support level of 84.38 to 82.55. If there were to be a pullback, those would be numbers that you might want to reference as a place to enter a long position. If we take a look at the most prior swing point that price is dealing with, which June 26, 5.4 million shares, and you got above it with only half that volume, 2.3 million shares. But that as long as now that was a key reversal. If price is able to stay above 86.68, you're at 86.64 right now, then that old resistance should become new support. So today, watch that close out there. That's the message of the daily chart for the semiconductor ETF SMH. If I look at the daily chart and go ahead and pull up my Ninja Trader charts out here, we've also got Stevie's red line that was crossed 2, 4, 5, 6 trading sessions ago. And this is a very bullish chart out here, by the way. Notice how that price oscillator got right down to the zero line. Never went ahead and moved below it. And then what we see out here is we see a test of Stevie's red line. As soon as price closed above it, told you had a rising price oscillator above zero. It doesn't get more. That doesn't mean you can't have a pullback. Just the intermediate term time frame message is just like Dano is looking for, which is trying to buy a pullback. So here, Dano, the other number to take a look at would be 85.16. I don't see the Tom DeMark 13 count. We did get that before that big old bearish engulfing session that took place out here on June the 9th. But price pulled back into an area that it should have and found support. Really, that little Tom DeMark support line, that red dashed line, could have been a support area. Price never got down there. So I don't see the TD sequential count today. I just see a TD setup count, and today would be number 7 of 9 successive candles, where the close in the current day would be above the close from 4 days prior. We don't know if that's exactly what's going to happen to the SMHs or not, but 85.16, 84.38 to 82.55 would be the areas where you would start to take a look at a long position inside of the SMHs out there. So I hope that helps you out. Let's see if there's any other questions here. Just want to make sure we get to all those questions. Okay, I don't see any other questions. So where else should we go? What else should we look at? What should we look at? Let's look at light sweet crude. See what it's doing. Trading out at 46.31 out there. If we take a look at light sweet crude, let's go look at our market profiles here, and let's go ahead and look at Stevie's synthetic contract. We'll look at the 60-minute. That doesn't look good once it closed below 46.54. This says price is pulling back to 46.10. That's the bottom of the 240-minute chart. You and I, we had calculated, we had estimated, we believed that where light sweet crude was headed to on that bounce was 46.84. And that's exactly what it actually got up to 46.89 earlier in the day, but that was the top of that weekly profile. Since then, price has pulled back. If price closes below 46.10 out here, that just tells us, geez, we've got much further area to pull back to. And where? Where, I don't know. Let me see here. I do know. I just don't want to say. Not that I don't want to say, but if I do say, It just might happen. By the way, that price level, the only price level we could go take a look at would be 44.49. That's not the only, but that would be one of the levels that I'd be looking for. So watch 46.10 in the case of light sweet crude. Now, you and I just looked at a correlation chart between it and the XLE, so this could be sending a message with regard to that indice or that sector inside of the S&P 500 out there. So that's what's going on in the case of the world of light sweet crude. We've really covered gold. We've covered silver. We've covered the yen. We've covered. I know what we haven't covered. So let's just wait until we get back from this breakout here, right? Let's go look at a couple of different things inside of the New York Stock Exchange. The one thing, we're close. We don't have that. We do have, by the way, we do have a new, again, all-time high in the advanced decline line. And you know the answer to this question. Has there ever been a bear market that has started with the advanced decline line at a new all-time high? And the answer, of course, is absolutely, positively not. The answer is no. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So we were taking a look at the New York Stock Exchange just before we went into the breakout here. Let's go finish the look. So the panels that you're looking at here, top portion is price. Second panel out here is the advanced decline line. You'll see that's at a new all-time high, fresh new all-time high. Below that is that's a summation, by the way. That's a summation of all prior advanced decline data. So it's at a new all-time high. Disregard the number 408,771 out here. Those of you that might track it manually, you'll have a different number because you've started at a different time. And by the way, and then the next panel happens to be the volume summation, which has not achieved a new all-time high. It's attempting to, but it is not there just yet. It should be able to get there within the next few days or so, but it is not there yet. If it does cross over that line, close above that line, that's the high that was generated on February 21st, 2017. Oh, my goodness, if that is not another bullish message out here. The very bottom panel is the summation index for the advanced decline oscillator readings. Let's just tell you what it is versus how to calculate it. What we know is it is at above zero, 153. That's a very bullish message for the New York Stock Exchange. By the way, if we go ahead and we take this daily chart and we pull it back to, I don't ever want you to just believe me. I want you to do the work out here. But if you take a look at the high that was generated, for example, in 2007, October 11, 2007, inside the New York Stock Exchange, when it went ahead and made its high during that bear market, what you will notice out here with regard to the advanced decline line is this was well below the all-time high at that stage. The all-time high, remember, this is October in 2007. The all-time high took place in June of 2007. June to October, about 4 months. It's typically about what you would see out there before any time. That created that nice little divergent pattern. The same thing with regard to the volume summation index out here. So when this is how it's going to continue to work. It's great data. Could this time be different? Yeah, I suppose it could, but it's not likely to be different. Okay, so what are we going to be watching for? Anything can happen. I can't control it. I can't control what the markets are going to do. But what we do know is we know the consistent patterns that exist out there, which helps us take our head out of the clouds, if you know what I mean, and be able to make decisions about what the markets are doing, what they're likely doing. Look, you and I know the patterns that are associated with every major market top, certainly every major bull market that has existed that we've been able to go back and track, you and I, since 1886 out here. So since we already know that, we know what to be looking for, do we not? Now, here's what one of the things you and I are looking for. And obviously, if the advanced decline line is a new all-time high, we've got pretty decent market breadth out here. And you can see that the advanced decline oscillator reading inside the New York Stock Exchange, that's the daily difference between the 19 and 39-day exponential moving average of that data out here. You can see we're at a positive 94.91 right now. It's going to change. And what we're looking for, what you and I are looking for, is to see if this thing can get up to the plus 150 level. In fact, what we're looking for is, can this get above the plus 150 level? At 150, that's when the market gets to the overbought condition. It's not. New York Stock Exchange is not overbought. If anybody tells you it's overbought, it's not overbought. You get to plus 150, then it gets to that overbought condition, which may not be a bad thing, because if it gets above plus 150, it's just simply the promise. And it's not a promise I'm making to you. It's the promise the New York Stock Exchange is making to you, that higher prices are to follow in the future. We're not there just yet. Folks, it's Magnificent Monday. You know what that means. Your favorite polar bear in mind, David White, is up next. After David White, we've got Tom O'Brien from 3 to 5. Have a magical Monday. We'll see you on Terrific Tuesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.